Hey traders, I'm loaded Forex, aka no signal, no entry. In today's video, I want to share with you guys my trading journey, how I started financial market many years ago. I started my trading journey using indicator-based strategy. When I was using this indicator-based strategy, I was making money back to back. But at some point in time, I started losing money, which is part of the process. I started losing this money for like 2 months, 3 months, 4 months. I now later figured out using only indicator-based strategy to trade the financial market will not help me to become a profitable trader. I started making a lot of research how I can use the indicator-based strategy with some other confluences in the market like support and resistance, volume reduction, wick rejection, reversal chart pattern system. When I started using these confluences with my indicator-based strategy, I started seeing a lot of positive results in the market. I did not say indicator-based strategies are not working, but using only indicator to trade the financial market is not advisable because you can't use it to make money for a long period of time. But when I started using it with other conferences, I started seeing positive results. And if that sounds good, click the like, subscribe, and turn on the notification button, and I'll see you after the intro. The first thing you have to set up is the moving average. I use two moving averages. The first one is 50 moving average. The second one is 20 moving average. To set it up, you come to your indicator, you type moving average exponential, then you click on it. I already have my own here. When you click on it, it's going to appear on your screen. Then you go to settings. Try to copy the same settings that I did for 50 moving average. Then come to style, copy the same settings. Come to visibility, copy the same settings. Then you go to the second one, which is the 20 moving average. Come to input, set the same settings. The style, the same settings. The visibility, copy the same settings as well. I use these two moving averages for different purposes. The first one is 50 EMA. I use 50 EMA for long-term trend. Long-term trend, while 20 EMA for short-term trend. The color that I use to represent my 50 EMA is the color red, and the 20 EMA I use color blue. How do you apply this indicator-based strategy with other confluences like support and resistance, reversal chart pattern, wick rejection? The first thing you have to observe is to ensure that the price action is trading above the moving average. Right here we have our 50 moving average, then we have our 20 moving average. You have to ensure that the price action is above or trading above the moving average. That is the first step that you must observe in the market before you take any decision. Now, the second step is that you have to ensure a retracement phase to retest this moving average. So what I usually do is to ensure a proper retracement to the moving average, and now wait for price action to give me information that represents the presence of buyers to take charge of the market to the upper side. First thing you must establish when the price action is retesting the moving average is to find the nearby key level zone. Since we are buying, we are going to be using support. Where is the nearest support zone? We have it here. The price action reacted here sometimes ago. The price action invalidated it, price retested it, price bought, price retested it again. This makes this particular support a valid key zone for us to take a buy opportunity. Another sign you must pay attention to while the price action is testing the moving average and the support level is weak rejection. As you can see here, we have weak rejection around this zone here. And if you look at the bearish candlestick that closed at this support zone, it was hammer. And hammer represents bullish reversal candlestick pattern. This is a sign that buyers are warming up to take charge of the market. We have talked about support confluence, right? Let me increase the font size. Then the second one is weak rejection. Weak rejection. The third one is reversal chart pattern. Reversal chart pattern. Under this reversal chart pattern, I use two reversal chart pattern to take my buy setup. The moment the price action retests the moving average and the support level. The first one that I use is my double bottom, or you can call it equal lows. Then I also use inverse head and shoulder, right? Inverse head and shoulder. Whenever I spot this reversal candlestick pattern, it's a confirmation that the buyers are now fully ready to take charge of the market to the upper side. I am not just using the indicator to trade the financial market, I'm also combining other external confluences to back up my sentiment in the market. Don't forget, the number one is support. You have to establish support near the moving average after the breakout to the upper side. While the price action is testing it, you have to ensure that the price action is also retesting the support level and is also retesting the moving average. The second one, you have to spot weak rejection at the support zone. Then the third one is the reversal chart pattern that is going to enable us to press that buy position or sell position depending on the sentiment of the market. Now, if you look at what is happening around this zone now, when the price action sold down to this support, price was rejected, right? Price bought to this upper side, then sellers took the market down to the lower side by creating equal lows. If you look at the formation here, we have double bottom. If you change your chart to line chart, you are going to spot it clearly. Look at the line chart, we have a clear double bottom, right? How do I execute my buy position? I have to wait for price action to break the neckline of the double bottom or equal lows. This place is serving as my neckline. I have to wait for a strong bullish candlestick to break this neckline to the upper side. The moment I spot this breakout of the neckline of this double bottom, then I execute my buy position and I place my stop loss around this here. Then I target ratio 1 to 2. When I'm using this indicator based strategy, I don't target more than ratio 1 to 2 in the market. If you are interested in joining my free trading community on Telegram channel where I drop free signals every week, click on the link below this video description. For you to establish a downtrend using this indicator based strategy, 50 EMA and the 20 EMA, you have to ensure that the price action is trading below the 50 period moving average and the 20 period moving average. Once you establish this bearish sentiment, the next thing is to wait for price action to retest the moving average, both the 50 period moving average and the 20 period moving average. While the price action is testing this moving average, you need to observe these 3 factors. Number one, is there a key level around the zone? Since we are selling, we are going to use resistance. Do we have resistance around the moving average? Then the next one is to observe weak rejection, then reversal chart pattern. You have to observe all these three confluences for you to get positive results while you are trading this indicator based strategy. Now, while the price action is testing it, we have to establish our key level zone. This space is serving as our key level zone. Price reacted around the zone, price reacted here, price also reacted here. Because when the price action broke this moving average to the downside, then the price action retested the moving average and also this resistance as well. Can you see the number of confluences we are having at our area of value or point of interest before we take sell opportunity? The second thing that you have to pay attention to is the weak rejection. And if you look at it very well, we have multiple weak rejections around this zone here. Multiple weak rejections. The third one is the reversal chart pattern for execution. If I'm taking sell opportunity, I use double top, wait for price action to break the neckline, or I use head and shoulder, wait for price action to also break the neckline. Looking at the formation of the price action here, we can clearly see head and shoulder pattern around the zone. Then the price action broke the neckline. After the neckline breakout, I execute with my sell position 2. As a day trader, I only target ratio 1:2 if I'm using this indicator based strategy. Can you see it after the breakout, price sold massively. If you target ratio 1:2, you will still be profitable at the end of the day.
If you want to learn more from me and also get access to my weekly signals on Telegram community, click on this link. It will take you to my Telegram channel where you can get access to other Forex educational materials on my Telegram community channel. Don't forget to click on the like, subscribe, and turn on the notification button so that you can get notification whenever we upload another exclusive Forex video like this. See you next time, guys.